Good morning. Welcome to the Zimbabwe. Today, interest rate increases in Zimbabwe. Will it stifle production? And is the real estate sector still an investment opportunity for you? Find out more in this show of The Mint. See you just now. Now then, closer to home in South Africa, last Thursday, the South African Reserve Bank cut interest rates on your savings account, particularly for retirees who are dependent on income from savings. But for many struggling households in South Africa, this will be their first break after months of hardship due to higher taxes and, of course, sky-high fuel prices. Unfortunately, on short-term debt, it won't make a difference. I'm going to take you through a bit of numbers here, so bear with me. On a car loan, for example, of 200,000 Rand, that's over 5 years at the prime rate, you'll only save about 25 Rand. But on a personal loan of 10,000, you'll probably save about 649 Rand. Home loans, of course, will be the most noticeable in terms of the interest rate cut and how it will benefit those people in South Africa. On average, a 2 million Rand home loan at prime rate, the rate cut will save you more than 300 Rand a month. Look, this will go some way to easing some of the financial pressures on South African citizens, including high electricity bills, which have started to kick in over the recent weeks. But there are other ways to make the amount in interest. Over the course of 20 years, this will cut your home loan repayment period by a full year. And this will save you more than 150,000 Rand in interest. Also, why not use your savings to pay off your high interest debt, things like credit cards and also personal loans? Anyway, that's a couple of tips of how to make the South African Reserve Bank's interest rate cut work for you, particularly those Zimbabweans in South Africa or those who have mortgages in South Africa. Obviously, that is a good tip here on The Mint. Please, we'd like to hear from you on our Facebook page, Zim Papers TV Network, and of course our website, ztn.co.zw. Now let's have a quick look at US markets. Now, really, as you all know, it's really earnings season in America and, in fact, all around the world and in Europe. But, in fact, today I want to just focus on one specific company, and that is Microsoft. Microsoft stocks rose almost 2% after the company released better than expected quarterly earnings and guidance. Let's look at some of the key numbers that Microsoft gave. Well, earnings, they were $1.37 per share, excluding certain items, versus $1.21, which was expected by analysts. Revenue was $33.72 billion, as opposed to $32.77 billion as expected by analysts. That's why we say that Microsoft beat analysts' forecasts. On an annualized basis, revenue for Microsoft grew 12% in the fourth quarter, which ended on June the 30th, according to a statement from Microsoft. It was the ninth straight quarter of double-digit annualized revenue growth. That's according to FactSet. Now, Microsoft shares have gained 34% this year, pushing the company past a $1 trillion market capitalization as investors continue to bet on CEO Satya Nadella's ability to bolster the cloud business and win deals against Amazon. Of course, Amazon is now coming up as Microsoft's biggest rival, particularly in the cloud space. Microsoft's Intelligent Cloud business segment, which includes the Azure Public Cloud, Windows Server, SQL Server, Visual Studio, GitHub, and consulting services, produced $11.39 billion in revenue in the quarter. Analysts polled by FactSet has been expecting $11.02 billion in the Intelligent Cloud revenue. Revenue from Azure increased 64% year over year, the lowest growth rate in over 4 years. With respect to guidance, Microsoft's Chief Financial Officer Amy Hood said on a conference call with analysts that the company expects to achieve between $31.7 billion and $32 Now, European stocks traded cautiously higher on Friday as market players increased their bets on the U.S. Federal Reserve cutting interest rates sometime this week. New York Fed President John Williams said the Fed should act quickly while the economy is slowing and rates are low. It is better to take punitive measures than to wait for disaster to unfold, he said in a speech on Thursday. In terms of individual stocks, shares of Galapagos climbed 7.1% after KBC Securities raised its price target on the Amsterdam-listed stock. AB InBev shares climbed 4.3% after it announced the sale of its Australian unit to Asahi. And at the other end of the European Blue Chip Club Index, Publicis saw its shares fall 8.5% in early trade to their lowest level since December 2012, after the French advertising giant cut its revenue target following disappointing second quarter results. And in terms of some numbers, as for economic data, the European Central Bank said Friday that in the 12-month period to May, the Eurozone's current account surplus widened to 30 billion euros. That's about $33.7 billion. That's up from 22 billion in April. Now then, Asian markets. Stocks in major Pacific markets made strong gains on Friday as comments from a U.S. Federal Reserve official led to rising expectations that the central bank could ease monetary policy more than expected. As you know, the market's anticipating a 25 basis point increase. However, comments coming out of the Federal Reserve Bank and officials indicate to the market that possibly the rate cut could be higher, even to the tune of maybe 50 basis points. The Nikkei 225 in Japan added 2% to close at 21,466.99. As shares of semiconductor equipment manufacturer Tokyo Electron surged 3.48%. In mainland China, shares gained on the day. Shanghai Composite rose 0.79% to about 2924.20, while the Shenzhen Composite added 0.751% to 1560.27. Over in Hong Kong, the Hong Kong Shanghai Index advanced 1.03% towards its final hour of trading on Friday. And in South Korea, the KOPSI closed 1.35% higher to 2,094.36 as shares of heavyweight Samsung Electronics advanced 1.5%. Asahi adding that it was still interested in the potential offering of a minority stake of Budweiser Brewing Company, APAC. The Budweiser listing in Hong Kong was cancelled last week, with the company citing several factors, including the prevailing market. Now, I'm not sure if you know, but across the border in Zambia, Bwalia Ngandu was sworn in as Zambia's new finance Deputy Governor of Zambia's central bank is the third person to hold the post in 3 years. He was sworn in at the ceremony in the presidency in the capital, Lusaka. Now, Ngandu's appointment comes as the government tries to revive an economy that the International Monetary Fund says is growing at the slowest pace in more than 2 decades after a slump in the price of copper, Zambia's main export. A drought is causing power shortages, and an escalating dispute with copper producers isn't really helping the Zambian economy either. The incoming finance minister will need to soothe foreign investor concerns that Zimbabwe may default on its debt unless it gets a bailout from the IMF or negotiates easier terms on loans that it obtained from China. He'll also have to rein in the government's ballooning budget deficit, possibly with spending cuts. The shortfall in the first quarter was $383 million, 12% higher than the finance ministry's forecast. The ministry has a deficit weakened against the dollar on Friday due to excess liquidity in the local money markets, traders said. The weighted average daily interbank lending rate dropped to 1.9981% last Thursday from 2.0705% during the previous session. Now then, European US dollar euro markets. Now the euro fell against a rebounding dollar on Friday as investors ramped up bets of a European Central Bank interest rate cut as early as this week. Money markets are now pricing in a roughly 60% chance of a 10 basis point cut this week versus a 40% chance earlier this week. So the market is already anticipating the cut, and most probably that cut has already been factored into prices. The euro's drop reversed some of its gains in the previous session when dovish comments from a key Federal Reserve Bank policy maker bolstered expectations of an aggressive interest rate cut this month, hurting the dollar. Rabobank analyst Jane ECB's base case was still for a September cut. Central banks are launching another round of policy easing in an attempt to lift stubbornly low inflation and fight signs of an economic slowdown. At a conference on Thursday, New York Fed President John Williams argued for preemptive measures to avoid having to deal with too low inflation and interest rates. The yen dropped against the dollar as well, falling 0.3% to 107.66. Sterling still remains under pressure, falling 0.2% to 1.2527 and undoing some of its recovery that it had on Thursday when British lawmakers voted for a plan to make it harder for a new Prime Minister to push through a no-deal Brexit. The New Zealand dollar, which had rallied more than 1% to a 3.5-month high this week, as investors expect Fed rate cuts to boost the attractiveness of the higher-yielding Kiwi. What you didn't know, of course, is that the Kiwi, the New Zealand dollar, has the second highest bond yield among G10 countries. Having a quick look at precious metals, we'll look at gold. Gold eased on Friday as investors booked profits after prices raced past $1,450 an ounce to hit a 6-year peak. Remember, we told you resistance is 1,400, so it sped past that. But Middle East tensions and prospects for lower interest rates kept bullion on track. Early May 2013 at 1452.60. Now that gold has broken through 14440, the figure will be the key for further gains, as it's expected that gold will start moving towards 1,500. Other precious metals also gained. Platinum was up 0.8%, palladium was down 0.1%, and silver rose 0.4%. Now then, energy, oil. Oil prices rose on Friday as tensions brewed in the Middle East after a U.S. Navy ship destroyed an Iranian drone in the Strait of Hormuz, a major choke point for global crude flows. Benchmark crude prices were still on track for their biggest weekly decline in 7 weeks, having fallen sharply in the week on hopes for easing Middle East tensions as well as demand concerns and dwindling U.S. storm impact. United States said on Thursday that the U.S. Navy ship had destroyed an Iranian drone in the Strait of Hormuz after the aircraft threatened the vessel, but Iran said it had no information about losing a drone. Still, the longer-term outlook for oil has grown increasingly bearish. The International Energy Agency is reducing its weakening global economy, and of course, and I've got to mention it, rising US-China trade tensions. Well, that's it for In the Market. In our segment, In the Economy, we're looking at interest rates. Do they stifle production in Zimbabwe? And the property sector. Is it still a worthwhile investment? Don't go away. We'll be right back. Welcome back to The Mint. I'm Andy Hodges, live from ZTN Studios in Harare, Zimbabwe. We want to hear from you, please. So keep your comments coming in on our Facebook page, Zim Papers TV Network, and our website, ztn.co.zw. And please visit our website. You'll see lots of content there from the ZTN newsroom, and also our shows like The Couch and also Heartbeat, as well as our ZTN reporters giving you up-to-the-minute news on an hourly, if not minute-by-minute basis. So please check out ztn.co.zw. Now then, it's Monday, so I got a bit of a smile. So I thought, let me play you this graphic and show you what is actually an entrepreneur. And I'm just going to take a couple of things from the graphic. You'll see that an entrepreneur, obviously you have a brain. A brain is where you have your pool of ideas. Your stomach says an entrepreneur should trust your gut. Your feet, dream high, but stick to the ground. And your heart, you must be full of passion, like I am here on The Mint every day. And of course, your legs, keep going in tough times, and your ears, listening for feedback. Well, anyway, those are some of the attributes that are attributed to entrepreneurs. If I look at your body parts, anyway, a little bit of a smile for you there on a Monday morning. Now then, our main story, interest rate. That the central bank raised its overnight rate to 50%. That would be a signal for banks to increase lending rates. Currently, banks' prime lending rates haven't really changed. They're ranging between 12 and 15%. That's from numbers we've got from the banks. However, if you go into a bank to lend, banks are lending at between 25 to 30% currently. And there is definitely pressure on interest rates to continue going up. Why, you may ask? Well, when you have high inflation rates as we do, year on year, 175% odd, then you know that we are what we call in a negative interest rate environment. So you can expect that there will be more pressure on interest rates to go up. Interest rates is also used by the central bank and the Ministry of Finance to control credit expenditure. That means to control the amount of loans given to customers. On finance. Listen to what the Minister of Finance, Dr. Ntutmube, had to say about interest rates.
If the interest rates will remain negative in times which they have, given where inflation is, the increase in the overnight interest rates will likely make monetary assets more attractive. This is making $10 more attractive. The increase in borrowing rates will also discourage borrowing for speculative purposes.
Finance, they're not mincing his words. It's clear that interest rates had to go up. In fact, prior to this, they were capped at 12%, which, of course, think about it. The issue here was that you could go into a bank and borrow money at 12%, take that money, go and spin it in the market, however you were doing it, and then come back and repay it, and you were still going to make a fortune. So obviously it was a huge avenue for speculation. In fact, we also talked to the economist Eddie Cross on The Chase to see what he had to say about interest rates. Listen to what Eddie had to say.
The sharp rise in overnight accommodation rates at the Reserve Bank was introduced with SI 142 to curb speculative activity involving borrowed funds. People were borrowing RTGS from their banks, buying US dollars, driving up the price, and then liquidating their foreign holdings to liquidate their RTGS borrowings and make a margin. And the profits being taken on that exercise were huge. The position of the the IMF is that this increase in short-term borrowing rates should not be extended for too long a period. Otherwise, it'll do damage to the wider economy. So as soon as we recognize that the speculative follow the inflation rate, which we expect to come back to normal by the end of the year. So I think it's a combination of those two elements that will guide interest rate policy over the next few months.
So you heard Eddie Cross there. This will try and reduce speculation. There's only one problem with interest rate rises, unfortunately. That means that those companies that want to borrow for productive means will find it much harder because they won't be able to repay the interest or even the capital on the loans they borrow. So as a result, too high interest rates will stifle production. There's no doubt about that, as it will restrict the ability for companies to go to their lenders and borrow money. We thought that we want to hear from one of the banks. So we contacted the CEO of Standard Bank, Ralph Watungwa, and he had this to say about interest rates and its impact on producers.
One would expect that the adjustment phase, particularly where Zimbabwe is now, comes with potential distress during the adjustment phase, as the cost of debt will rise and may cause problems for those who have deployed borrowed funds in investments that do not provide adequate yield to cover the interest rates that they're paying on their loans. Although expected that the current liquidity challenges and interest rate hikes could impact the productive sector and reduce productivity where the productive sector is unable to meet the high cost of borrowings. So the jury is out. I believe that the interest rate regime that has been rolled out is appropriate for the circumstances in which we are and is being used appropriately to stabilize the economy and to ensure that post the adjustment phase, the country is on a platform for sustainable growth.
That was the CEO of Standard Bank, but listen to what he said right at the end. He says he believes the company is now on a path to sustainable growth. One other problem, of course, that the banks have to worry about with high interest rates is whether their loan book will start turning bad. That means that customers cannot afford to repay both the loans and the interest. Anyway, we're going to keep an eye on you for that. But however, let's be clear, interest rates have to go up, and in fact, even here. Anyway, let's look at another point now. We know a lot of Zimbabweans like investing in property. The question, of course, is the property market still the place for investment? Well, with property counters on the Zimbabwe Stock Exchange anticipated to remain under pressure as voids surge driven by weak economic fundamentals, appetite for Zimbabwe properties is expected to remain low. HCI Consulting of South Africa Chief Executive Officer Wayne Troughton last week said in the medium term, local real estate demand had whittled down on the back of general policy ambiguity. Here's what Troughton had to say.
As we mentioned, Victoria Falls remains the strongest overall market, whereas Bulawayo the strongest occupancy growth in 2018, and Harare trends of the economy and the currency issues have had a major impact. So just looking at future supply, this is estimated mainly to enter sort of in the medium term. I think in most of these markets, up until 2018, there was a positive sentiment that there was expected change and things were going to be far more positive. I think at this point, with the current currency issues that the market's experiencing, I think an issue relating to interest in Zimbabwe from international brands as well as from international investors, because Zimbabwe, as mentioned in some of the previous presentations, has a lot going for it in terms of strong economic, strong skills development. It has good infrastructure relative to other economies in Africa. It also has a lot going in from mineral and natural resource wealth. So I think the key thing is most of this development is expected to come in a sort of medium term, and currently it's a wait and see approach.
Right, we cross over to Mint correspondent in Dhaka, Majaka, to hear more about this issue. In Dhaka, you know, I think the question is, of course, Zimbabweans do like investing in real estate. It's a fact, and if you see some of the buildings going up around the city, you'd appreciate that. Do you think, having listened to the words there of Mr. Thornton, do you think it is still a time for Zimbabweans to invest in the real estate sector?
And definitely, I think this is the time for Zimbabweans to invest in the property sector because, as you've said so yourself, prices are depressed at the moment. So it may be a really good time to consult one or two brokers, invest in property stocks, buy property if you can, because the prices are still depressed at this particular moment in time. Experts actually expect that once the economy kicks off, property prices are going to shoot through the roof. So this may actually be a good time to invest in property. And you may also be aware that most property companies are decentralizing from the central business district and venturing into office parks, venturing into cluster homes. So this is definitely a good time to invest in property.
Well, I have two just quick questions. I mean, obviously that means that if you look at property stocks in the Zimbabwe Stock Exchange at the current levels, even though, I mean, analysts believe that the market is undervalued, it may be a good time to buy such counters such as First Mutual Properties, Mashonaland Holdings, Dawn Properties, and Zimri Properties. And my second question, of course, is that you can't be buying for rentals because it appears that demand for properties, particularly in the CBD, has come down as companies can't afford the high rentals of renting office space.
Okay, let me tackle your second question first. The thing is that apart from the high rentals, there's also the issue of the informal sector. So with the emergence of the informal sector, which is growing so big, it now doesn't make sense for people to invest in central business district space at the moment. So that's why I've mentioned that companies like First Mutual Properties are divesting and are moving out of the central business district. And then to your first question, of course, most people are buying property stocks at this particular moment because as much as the market is believed to be grossly undervalued, it makes sense to buy at the moment. Most people are hedging against inflationary pressures, so whatever stock is valuable that particular day, investors are snapping it up instantly.
Right, that was in Dhaka Majaka, Mint correspondent. Now, therefore, you heard what she had to say and what we say on the Mint. Have a look at the property market. Of course, you're here looking for long-term gains. The question is, what can you invest in that will hopefully hedge your investment against inflation? And it looks like the property sector could be one such. And according to Mr. Thornton, it is depressed at the moment. So you may, if you look, be able to pick up bargains. Now then, Kenya is set to commission Lake Turkana wind power in Marsabit County, with the largest wind farm in Africa. That's going to be launched by President Uhuru Kenyatta. Construction of the mega wind power farm was completed last year, but could not produce power since the Spanish firm contracted to develop the transmission line filed for bankruptcy. However, two Chinese firms took over the construction of the 428-kilometer electricity transmission line to evacuate the power and completed the infrastructure in August this year. The project will be a major boost to the country's international commitments to lower greenhouse gas emissions. Now then, let's have a quick look at Eskom's dodgy deal. Now, did you know that Eskom, 3 former employees face allegations that they cashed in a 270 million boiler monitoring software tender? Here's the funny story. The software is now owned by a company called Carib Technologies, which Eskom used until last April to gather data and monitor the performance of its boilers. But actually, the software belonged to Eskom. But Eskom ditched Carib Technology in April after Treasury's refusal in September 2017 to approve its request to extend the tender by another 70 million. The tender expired in 2016. Now, the rolling blackouts have gripped the country are partly due to this. But listen to this. Eskom then went ahead to issue a tender, 165 million, to Careb in 2011, but no tender process was followed. Then in 2014, they increased it again to 110 million. Imagine that, paying over 275 million rand for your own software, which has been moved to a new company. So as you can appreciate, Eskom staff are in trouble. Anyway, our last thing to give you a smile on a Monday. Do you need an excuse to miss work? Well, the company has launched an excuse absence network service for US employees and students, which offers a load of excuses you can use to be absent from work. The Excuse Absent Network provides all your excuse letters for just $25. There can be notes which appear to come from professional doctors or hospitals, and even fake jury summons, an authentic-looking funeral service program with poems and pallbearers. The founder started the business for $300 and currently runs it off a laptop in small Oklahoma town. The site gets about 15,000 hits a month. Well, as we say on The Mint, there's nothing like a bad idea. Well, that's it for you on The Mint on a Monday. As you know, I'm with you every morning at 10 a.m. here on ZTN. Please keep your comments coming and watch us live on our Facebook page, Zim Papers TV Network, and of course, our page, ztn.co.zw. Well, you've been watching The Mint. I'm Andy Hodges. You have a great Monday. Remember, smile, it's a fantastic day. And you all be safe. Goodbye.